Wednesday, June 15th, 2022, Monaco 64, home of alternative economics and contrarian views. Why am I smiling so much? Well, the ECB and Madame Lagarde have blinked. We've been warning you, of course, about the bond yields in Italy and Greece and other countries, especially Italy. So in the last week, we started looking at it when it was around 3.4%, the 10-year yield. Yesterday, we got up to almost 4.5%, the BTP yield in Italy, government bond there. And this morning, this is what we get. ECB calls unscheduled meeting to discuss market turmoil. So the central bankers, well, in the case of the ECB, they're pivoting even before they start tightening policy. It's such a joke. And I expect it to be D-Day for the Fed today. Yes, we have the big meeting. And what do I mean by D-Day? Well, I think the Fed, they're defending the beaches in this case. And the bond vigilantes are the good guys. They're the force of the free markets. And that's why we've seen bond yields go through the roof, because the free markets don't believe in the illusion anymore. They don't believe in the so-called neutral rate that Wall Street, the central bankers believe in, that they can keep interest rates just around 2 or 3% and everything will be okay, that there will be no inflation. Well, that's all gone out the window now, because the 2-year yield, for example, now is above 3%. It got up to 3.5% yesterday. Yes, yields have come off this morning because of this ECB emergency. It's an emergency meeting. And yeah, many are talking that the Fed will raise by 1% even. But it's too late, Mr. Powell. I've been saying this for months, last year even, when we saw CPI rising, and they kept telling us, don't worry, it's transitory, and they did nothing. Don't forget, they only started raising rates by minuscule amounts recently. And I kept saying last year, why don't they have an emergency or an unscheduled meeting like Lagarde is having and raise rates by 1 or 2%? It's too late, and they're not going to be able to defeat the free market forces or the bond vigilantes. It's not going to be an overnight victory for the free markets, of course. Just like in 1944, it took another year or so for the Allies to defeat the forces of darkness back then, if you want to call it that. And I'm not trying to compare the Fed to the Germans. I'm just using the analogy. Here, the Fed is the forces of manipulation of fraudulent monetary and financial system. And the bond vigilantes, who were very famous up until the 90s. They're the force of the free market. They're the people who want to know the real value of things, not these inflated Mickey Mouse prices of financial assets. And that's why we're going to continue to see the stock market, the general stock market, the bond market, corporate bond market, mortgage bond markets continue to unravel. And the depression that we're going to have, unfortunately, is going to be monumental, the economic depression. And I think, yeah, they might be able to bring down the CPI, but I don't think we're going to see 2% CPI, unless, of course, they doctor it a lot for a very long time. We could see it drop back to 4 or 5 in the next few years, but that will be the bottom, because I think the Fed is going to do an ECB very soon. They'll have to. And why do I say that? Well, past action by the Fed dictates that there are always accidents and recessions when they shift their monetary policy. So as you can see here, back in 99, they raised the Fed funds rate from below 5% all the way to 6.5%. by August of 2000. And then we had the dot-com bubble burst, and we had the recession of 2001. And Greenspan cut rates all the way down to 1% by 2004. And then they had to shift again policy. They raised rates from 1 to just over 5%. And then you had the accident, of course, the subprime mortgage crisis started, and we had the '08 financial crisis, and then they cut rates again, basically down to zero. Yes, they try to normalize again back in, from 2016 to 2018, 2019. And again, there was an accident, the repo crisis in 2019. They tell us it's COVID in 2020, but no, it was the repo crisis that really unraveled everything. In September of 2019. The Fed had to start doing QE again. They call it not QE, but it was basically a farce. And they had to cut rates again. So they're only able to go up halfway to where they had gone back before the '08 crisis in terms of rate. They went back up to around 2.5. They had gone up to like 5%. So now I think they'll probably do 0.75% today, and that will take them to 1.5%. Which is halfway where they were back in the beginning of 2019. And then we're gonna get what's the accident gonna be? Well, I think it's a dollar crisis, and not against the euro or the pound or the yuan or the yen. It's a dollar crisis against real money, i.e., gold and silver, and not the paper kind, of course, the physical kind. And I think it's going to lead to a very bad economic environment. I know Joe Biden said that apparently we're in the greatest economy ever, but the guy, we know that guy is out of it. So, and it's not just going to be in the US, it's going to be all around the world. We saw the other day we had negative GDP in the UK. We're seeing, everything unravel. The cost of living is going to increase. So the cost of living crisis is going to be around for a long time. Yes, we're going to have, if you want to call it, a deflation of prices of things we don't need. Luxury goods, maybe, stocks, bonds, technology is going to get hurt a lot, I think. But everything that we need to survive on, like real things, general commodities, shelter, fuel, healthcare, all those things are going to be very hard to get, in that they're going to become unaffordable. And yes, it's not going to be a pretty sight. And yes, so it didn't take, I mean, it's amazing that the ECB is pivoted even before they started raising rates or unwinding their balance sheet. They're supposed to raise rates in July. But I mean, calling an unscheduled meeting like this to discuss market turmoil tells me that they've lost their nerve, so to speak. So let's just read through here. It says ECB calls unscheduled meeting. Borrowing costs for heavily indebted countries climb to 8-year highs. And I told you, of course, in the last week or so that these borrowing costs are rising rapidly. And that's the problem. And it's not just, well, all the countries are heavily indebted. It's not just Italy and Greece. Germany used to be not so indebted, even though relatively speaking it's not. But they've gone from below 60% of GDP, the national debt, to almost 80% in the last 2 years. The US is heavily indebted. The UK is heavily indebted. And it's not just heavily indebted countries' yields that have risen sharply. Look at the US. We started the year at 1.5% on the 10-year. And yesterday we got to 3.5%. So more than doubled. Interest rates have more than doubled, or yields. I saw mortgage rates in the US above 6.2% yesterday. Just think of how that's going to impact the economies. So yeah, the European Central Bank has called an unscheduled meeting of its governing council to discuss the recent sell-off in bond markets, raising the prospect it could announce a new tool. Well, what new tool? The only tool they have is to print money, right? And how can they be raising rates and printing money at the same time? It doesn't make any sense. And yesterday I said the Fed is losing all credibility, and so are other central banks, the ECB, the Bank of England, the Bank of Japan. And that's why it's going to be a dollar or a fiat currency crisis, the next crisis. So, yeah, 2000 was a dot-com crisis. 2008 was a housing banking crisis. So you can't get bigger than that. So the next really big crisis, and 2020 was a crisis, but I think what's happening now is going to dwarf 2020. That's going to be a currency crisis, in my opinion. So, yes, it's going to be interesting to see what the Fed does today, and also what Jay Powell says during his press conference. Press conference starts at 2:30 p.m. Eastern Time or 7:30 p.m. London. Their announcement, of course, is at 2 p.m. Eastern. With that, let's quickly look at where the markets are this morning. We'll start with the bond markets because of this ECB news. So, as I said, Italian bond yields had raced ahead recently by about 100 basis points in about a week. So right now, the 10-year yield in Italy is at 4%. It's down 20 basis points. So just the announcement by the ECB made bond yields drop and bond prices rise. It will be interesting to see what they actually come out with after their meeting. And even the US bond market has benefited from this ECB announcement. The 10-year yield is now down 10 basis points overnight at 338. Of course, what the Fed does as well and says will be important for the bond markets. And why are the bond markets so important? Well, because they're the biggest market in terms of asset class in the world. And they set the price of credit, money or credit, if you want to call it, for every other financial asset. So that's why it's so important. So it's around 8:30 a.m. London time. We've got spot gold at 1821. It's up about $12. High's been 23 and the low 1806.90. So up just under 1%, about 2/3%. Spot silver is up 1.12% at 21.26. I think it was Rafi Farber. He wrote in his report the other day that premiums for junk or constitutional silver are going up and up. I think it's about 24%. And for the silver eagle is even more. What about the stock market? How we're doing this morning? Well, it's relatively quiet. The Dow future is up 40 points. NASDAQ is up 38 and S&P up 9. So nothing to write home about so far. The FTSE is up 26 points and the Euro stocks 50 are up 28 points. To the currencies, and we saw the British pound yesterday break through 120. We went down to, I think, 119.30. The key level I think we're going to go to eventually is going to be around 114. That was the low in 2020. And but I think the best performing currency, so to speak, well, they are currencies, are going to be gold and silver, not just against the dollar, but against everything. So right now the British pound is up 0.25%, just above 120, 120.25. The euro is up 0.2% at 104.87. So it's kind of weird. The FX market thinks that the fact that the ECB is going to announce more money printing is a good thing for the euro. But I guess in the short term, it helps stabilize the bond markets. Maybe that's why they're buying the euro. But I wouldn't be buying any of these fiat currencies, the dollar included. The dollar is down just over 0.5% versus the yen at 134.66. And the dollar is down 0.25% versus the Swiss franc, 99.88. Dollars down 0.5% versus the yuan at 672.30. Let's look at that pesky Russian ruble. Well, the dollar's dropped a little bit here. We're back down towards 56.50 against the ruble. The dollar is. Aussie dollar's up 0.5%, 69.08. The Canadian dollar, well, the dollar is up 0.1% versus the loonie at 129.65. And the Kiwi dollar is up 0.1 as well at 62.22 versus the US dollar. And now to the general commodities. WTI crude is unchanged virtually, 116.30. Brent crude is same, trading just below 120 at 119.20. And high grade copper up 0.5% at 419. US nat gas is up 0.2% at 725. So let's wait and see what happens on D-Day for the Fed. It looks like the ECB is blinked, of course, even before they've done anything, which is a really bad signal, or, you know, it says they're in trouble. And we've said all along that the central bankers are damned if they do, and they're damned if they don't. And that's why you need to protect yourself substantially, I would say. That's my opinion, outside the system with hard assets, especially gold and silver. So yeah, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yeah, I wish you all a great rest of the day, and let's keep an eye on things. Take care. Bye.